good morning, and great morning, guys. Welcome to another fabulous episode of Exit Strategies Radio Show. Hey, I'm your host, Corwyn J, Melette, broker and owner of Exit Realty Low Country Group in beautiful North Charleston, South Carolina. So if this is your first time tuning in, you're in for a treat because our mission is very simple. That is to empower our community through financial literacy and real estate education, guys. We are legacy building. That is what we do here on this show. Got to give a quick shout out to those who listen to us faithfully. Guys, you all rock. From those who are tuning in, guys, all the way from Hollywood, what you know, no good, all the way out there to Monkey's Corner. That's where my mama live. Y'all know that. Thank y'all so much for listening to the show. However you do, whether that's on your favorite podcast platform, whether that's on our website, or whether you're tuning into our local stations that are carrying the show. I want to give an extended welcome to our listeners in Marion County who are now starting to get the introduction, if you will, into what it is that we do and how we're seeking to give back by educating the people within the community and providing them options on how to achieve, how to build, how to foster, if you will, financial independence. That's what we do here. So again, thank you guys, all of you, for tuning in. And I'm super excited about this show. Now, we usually talk about the range and the gambit, meaning we're talking strategies about how to do this, whether it be syndicating, whether it be starting an investment group or whatever it is, buying an individual property, buying commercial property, whether it be apartment buildings or we've done storage units. We've done a lot of that. But hey, one of the things that typically is needed in all those situations is leverage. How do you leverage that financially? And today we got the money. We got dreams and aspirations, right? We always, okay, we want to do this, want to do this. But then one of the things that always seemingly in conversation that I hear oftentimes around is that defeating, that moment when, well, I don't have the money for that. And there's a defeating that takes place at that time. And we're going to eliminate that today because what we're going to focus on is the fact that when you have the idea, you can figure out and find a way to capitalize it. So today we got the money. We got with us Paul Anderson. Now, Paul is like a money guru. He's been doing this for a while. If y'all watching me, y'all see me move my fingers over here and rubbing his money together because that's how money makes money, by rubbing together. We make our money work and do things together so our money grows. And Paul is an expert at helping people acquire the funding they need to complete not only residential projects, but also commercial projects as well. So I want to take a moment, introduce someone who is going to blow your mind today and drop some nuggets and information education on you. Paul, welcome to Exit Strategies Radio Show.
Thank you, Corwyn. That's quite an introduction. I appreciate that. So,
well, you're quite welcome. Paul, if you don't mind, look, you got a lot of connections in a few different silos, if you will. Give our listeners that 50,000-foot view of who you are and what it is that you do.
Sure. And I just want to start by saying, I think something that you touched on in the very beginning that is so important and so overlooked is financial literacy. It's a plague. And so it's something that is very near and dear to my heart and that I've spent a good portion of the last 12 years trying to get people financially literate and get them educated about what their life holds for them. As far as myself, my whole life background has been around real estate and finance. I grew up in a residential real estate brokerage working for my dad. When I was a kid, I started 8 years old, licking envelopes, knocking doors, doing mailers, doing whatever I was told. Came up through that, got my real estate license, just did some residential sales. And then ironically, somehow I found myself in the hotel industry, helping a hotel company out of Georgia buy and sell hotels. And as happens in industries, they got bought and sold by another company. So I went from working in Georgia to California. And the same business, very different philosophies. So worked with them. I'm getting hotels ready to buy and sell. And for the last 20 plus years, my emphasis has been on residential and commercial lending. And as I mentioned to you earlier, a couple of years ago, I started getting into real estate syndication, which is fun. So as everything's evolved in the real estate industry, I've tried to evolve as well. So it's been a great ride. It's not over yet. I got a feeling it's going to get even better. So here we go.
So, Paul, thank you for that. You mentioned that you worked it from one end of the gambit or one end. I won't say all the way to the other because, to be frank about it, the further you go along, in my opinion, the further you go along, this tangent, this line, or this train thing, you realize so much more is beyond that. We think that because we've done this to this, that's it. Sometimes that's what the outside end looks like. But when you're inside and looking out, you realize there's so much more that you can explore in other realms and genres that you can get into as far as real estate growth, investment, development, blah, 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 blah. The list goes on and on. So let's touch on some of the lessons, if you don't mind, that you have learned, like some of the things that you have learned over the years and what you share with consumers that you're working with who are seeking financing. What is those initial pinch points, pain points that you tell them to look out for?
Well, I think pretty much everything I'm going to say today does come back to financial literacy and educating yourself, because usually what we do, and regardless whether it's my side of the coin or your side of the coin, when we're working with clients, so much of this comes down to what they don't know or what they think they know. And the crazy part of the world is now it's not like it was when we started out in this. Now everybody's got a device in their hand that gives them all the information they'd ever need. As to your earlier comment, what I like is the more I learn what I don't know. And so really working to help people understand the impact of home ownership and how real estate can be transformational for them. I can go back to even good example for me personally was even when I was working in the hotel industry. Great company, things were going along well. We had a lot of opportunities to invest in things, but we also had a company sponsored 401k. And that was amazing when you're seeing steady growth. But what happened is the dot-com boost or the dot-com bubble burst. And all of a sudden, if you were heavy in tech, what happened to your 401k? It goes away. Companies go out, and we're seeing that now. Companies that were strong, vital companies not that many years ago are now going out for a litany of reasons. What I came to figure out, my dad helped me with this when I was young. As we know, real estate values can fluctuate and they can change over time. But you can leverage, to your earlier comment, you can leverage massively, which you can't do with other forms of investment. And as long as you find a way to debt service that property, whether it goes up or goes down, won't matter till it comes time to sell. So what I've always liked about real estate, whether it be residential or commercial, is one, I can leverage. And especially for young people starting out, we're doing a lot more with like duplexes around here where people are figuring out I can come in with 3.5 or 5% down and buy a duplex and cash flow it. And I'm starting out as an investor. I'm creating wealth. I'm creating some passive income. And this is a repeatable, duplicatable process. The great thing is, regardless of whether the market goes up or goes down, to me, you still control the asset. And I go back to, and to me, Corwyn, this doesn't matter if you're buying stocks or bonds or ETFs or you're buying real estate. It's all when you buy. So that is when the money is made. So with real estate, if you buy it and you're in it, you're leveraged, let the market do this. I've had people, I remember in 07, 08, a lot of my investors were like, oh my God, I'm losing all this equity. Were you going to sell? No. So good. So what I told them is go down to the assessor's office and argue your taxes and get your property taxes down and cash flow your property better. Go to your insurance company and say, oh, that property that was worth this, we're down 75 grand over the last 2 years. We need to re-rate it. So run your business like a business. For them, what we had happen is the market came back and then it came back and it kept going and going. So like in our marketplace back in 21 and stuff, they're all like, oh my God, I got a mountain of equity. So now it's time to sell. So now they have a bigger problem. What do I do with the capital gains tax? And I'm like, haha. So not only did you get out of that hole, now you're so far out of the hole. Now you've got a gain issue on the other side. We helped a lot of them through various different vehicles, primarily 1031 exchanges, take and sell those properties here and take those proceeds and go to the Midwest. So I'd never done as much business in my life as I did in Missouri and Kentucky and Tennessee and Arkansas, all around the Midwest there, and buying cash flowing properties that are massively cash flowing. So they took one, wrote it out, sold it. That's kind of like going to Vegas and doubling down, except you win. And so they took that money and now they've been able in some cases to double the size of their portfolio, not all of them, but now they have all these properties that are cash flowing like mad. And I'm like, and they're still in control. And during that time, we've seen the market come and go. When you're your own company, I think you're going to run it better than anybody else. And
makes sense. One of the things that you touched on in there And it's something we've talked about here. It's been a while, but we've said it here because people always, equity is phantom money. It doesn't mean anything until you seek to realize it, meaning that you go to sell the property or otherwise need to refinance it, to leverage it, whether you cash out refinancing or whatever it is. That's when it's relevant. Outside of that, it's not relevant at all. And oftentimes I watch people get so hung up on all of that. So thank you for touching on that, because that's not what we do. We're trying to move forward. We're trying to make sure property is cash flowing if you're an investor. That's what's important, the cash flow, the return on that property, the ROI, the return on the investment. So one thing Paul, I'd like for you to weigh in on is the outside of that, what you've noticed historically was obviously that time period, the recession and all that stuff, good heart palpitations, right? But what have you noticed historically outside of that you leverage in educating people in regards to what real estate tends to look like, what its performance normally is?
Well, and I think there's so much, and again, this is kind of where it gets crazy. There's so much data out there, but if you go to good, reliable sources, and I like on your guys' side, you guys have access to such incredible data, and there's so much data. But one thing I say is real estate is not an HGTV game. So we get into these little pockets of fix and flip craziness and everything like that. And it works for a short period of time, but it's not sustainable. I've never met somebody who could do a 15, 20, 25-year run just doing fix and flips. We're all investors and we all understand risk tolerance and return and preference. If a fix and flip deal comes up, great. If a wholesale deal comes up, great. But where I've seen the most success is the long-term buy and hold. And that has changed in the respect that the tenant base has changed. So I've got some clients, and I myself personally have converted some properties to short-term rentals. I mean, that is just like print. That just makes money. You have to hire an accountant. It gives you like accountant type problem. So I think, and that's what I always tell people. This is not Vegas. Don't go throw it down on the table and expect to get rich overnight. We're not playing the lottery here. You have to have a strategic strategy. And that's back to where to me, the financial literacy comes in. Because like I said, and I'm sure you get this all the time too. Hey, I found this property. I can buy it for this. ARV is this, and I've got a $30,000 margin. Now we need to talk about holding costs. We need to talk about marketing, sales expense, because HGTV doesn't do that. And so all of a sudden you get real with them on the numbers and you're like, but if you can buy it for that and rehab it for that, and you can rent it for this, a cash flow for that, now you've got a long-term hold property that's creating passive income that you just have to manage or find somebody to manage it and write off the fees. One of the things that's really different, though, over the last 2 plus years with rates where they're at, too. So we've had to look at it from a different standpoint. Now, all of a sudden, when rates on a non-owner occupied property go from 4% to 8.5%, how do I make it cash flow? And I'm like, how much in mortgage interest do you get to write off your taxes? Now, all of a sudden, that $200 that it was red is probably $275, $300 in tax. So now you're actually positive just through the interest the interest deduction. There's so many different ways to do it out there. But again, that comes down to strategic planning and financial literacy. I will probably say more about financial literacy than anything throughout this because it's so important for you, for me, for everybody. It's important for our country, whether you're in real estate or not. But for what we do, it's vital.
So you're beginning investors. Do you work with a lot of them? That's the first question. Do you work with a lot of them?
I love beginning investors. Now, I will tell you this, I don't land all of them because some of them have it already figured out, and that's okay. My deal is this, and this is where sometimes I've worked with a lot of agents over the years, and not every agent understands investment real estate. Matter of fact, there's a select few that do it, and they do it really well. But from my side of the equation with an investor, it's just a math equation. Does it pencil? Will it make you money? And does it meet your risk tolerance or your risk preference? Because that's a big part of it. So there's also the whole psychological, emotional side of this, making sure it fits in their emotional box of this is my risk comfort zone. But no, I think when it comes right down to it, we work with a lot of investors, different stages. Some of my clients who are trying to push their kids into real estate investing will send them to me. And so I love the brain side of that. I'm not on the emotional side of, oh, this is so beautiful. And my God, look at these finishes. I'm like, where's the equity and where's the cash flow? So I can look in our market at a 3-2 starter that's 1,200 square feet that's dinged up. And I'm like, oh, well, here's a couple areas where we could put 8, 10 grand in it, $250 a month return on that 8, 10 grand above and beyond, and show them how to do it that way. And seeing young people, bringing them along and seeing them have success. Like I said, we're doing a lot of, I call them the kiddie condo theory, where they buy a duplex or a triplex and maybe mom and dad co-sign because they got to get there. We cash flow it with the rents on the other units, get them started, refi mom and dad off in a year or two, get them into a standard conventional loan throughout the refi. And then they turn back around and they do that with another FHA loan with 3.5% down. They build a portfolio. So we've got the tools out there and you can leverage like Matt. It's just understanding how to do it and doing it smart.
Very good input and response there, Paul, because there is a tremendous opportunity. When I like what you talked about, I've never heard the term the kiddie. I've never heard that before, but I've actually had people that have done that. Their parents have co-signed for them to buy their first property. They in turn grow from there. Ideally, buying something multifamily, whether it be a duplex or triplex, something like that is going to be a game changer because you leverage the rental from the other side to essentially pay for it. And as you say, then you move to another. Now you got essentially a full property, 2 units renting, 2 to 3 units renting, paying for not only itself, but at that point in time, throwing off some cash flow that may actually offset you or help you pay for the other property that you went to. And you can continue to do that. That's one of the things that is so neat to me about real estate. We always have, and I say we always have, but a lot of people have this one and done mentality of they're trying to go buy one house. And if they can't buy the house they want, then they don't buy a house, which doesn't make sense because you continue to throw away money in rent. But that's a whole nother story and a whole nother animal. Now, you guys do on the investment side, again, you guys do private, you do what we refer to as hard money as well. And that is only commercial property, if you will, meaning a person can't own or occupy. They have to make that into some type of investment, rental or otherwise. But what trends are you seeing on that side of the equation?
And you've probably seen this too over the last several years, the emergence of what we call the non-QM loan, so a non-qualified mortgage. I can give you some examples of folks. I was actually talking about this at a breakfast meeting I was speaking at this morning for some local folks who I know, and they're both in the business. He's a builder developer. She's a realtor developer. And so they write everything off. So on taxes, they look poor, like 4 O's and poor. When we go and we run a bank statement analysis for them, they rich. And so like just simple math on taxes, and they've got an amazing accountant, does his job. He writes their income down to about $11,000 a month. Bank statement loan, they're both making over $256,000 a month. So it's a $500,000 swing. Now they're in the game. And where they itemize everything, they're going to pay a little bit more for that money. Don't get me wrong. They'll pay more for that money. But as I told them, now you've got additional interest expense. So you got more write-offs. And so now what we've seen with them over the years is now they have carry forward losses on their taxes that they can deplete out over time. So even when things turn around, and even if they went W-2 and made great money, they would have several years of losses stacked up that they could deplete and not have to pay taxes. So the tax strategy side really fascinates me.
So yeah, I love that. And those tools are built into our existing tax code, and it encourages growth because in development, because in that situation scenario, they can continue to develop housing and continue to grow, if you will, financially without that added pressure on the backside, because that would actually, in some instances, completely hinder people from being able to do any of what you just said. So that is awesome. I love that. And thank you so much for sharing that. Now, Paul, again, you've been doing this for a while. And again, you residential, traditional program. So you do help with that. You also work and have a niche with investors, traditional, if you will, non-QM, private, and then hard money on the back end. So if you don't mind, I want to make sure we get your contact information out here for our listeners. So tell our listeners how they can reach out to you, get in contact with you to ask those questions that I know they have that they can't ask because, hey, they ain't able to call into the station today.
I keep it simple. I'm just a simple guy from Idaho. So keep it simple. My website, Paul's Home Loans. It's It's real simple because I'm a simple guy. Just you go in there, you drop me a line, we can talk strategy. Love doing consultations because just like this, it's good. It works that side of my brain. I love that. I love strategy. I love showing people, hey, how we can get from here to there and what it can do for you. And then you see them take off and run with that. Now all of a sudden they get the bug. And as you know, you get the bug and sometimes you end up in the business with the bug, or sometimes you don't work anymore. I have a couple clients and we were part of their whole goal, and it was to fire their W-2. And now they've got so much passive income that, now I'll just say this, and honestly, they're some of my best friends. And once they retired, they now work harder in retirement than they ever did their W-2 job, sourcing deals. But if you can do that, and I think we look at the state of things today, and it is more expensive to live now than it's ever been. So I think that we have to have multiple streams of income. And passive income that grows wealth through equity over time, that's incredible, because I truly believe this. I don't think you'll ever get wealthy on cash flow, but you can get wealthy on equity, and cash flow is great to have along the way. And it affords you the opportunity to go out and create more equity.
That is so true. Investing the cash flow magnifies you. I mean, literally, you can magnify its growth. And that's one of the things that counsel, if you will, that I give people, Paul, along that same vein of, invest the cash flow. Don't just let it accumulate and sit, quote unquote, on the mattress. Invest it and exponentially impact your wealth over time. What could it be? And I've watched people do this as well. So it's amazing, the concept. So Paul, high level, the mic drop question, if you will, because you've been doing this over 20 years, which means that you learned a lot in that time period. If you are able to go back to the very beginning, knowing what you know now, what would you have done differently that you think would have exponentially or catapulted you much further than where you are now?
I think take more risk. And I don't say that recklessly. Take calculated, educated risk. And I think 20 years ago, like I said, we didn't have a device in our hand where we could get all this information. So there are so many tools out there for people to go and get educated that are incredible tools, like Bigger Pockets. I get a lot of business from Bigger Pockets. It is a great site. People can get a lot of knowledge there. They've got experts in their backyard, just like you, who've been doing this forever. And that's the other thing too, the market. And so markets are all different and they have little subtle nuances. And so you understand your market just like I understand my market. So from that education standpoint, but if I had to really break it down to one thing, it would be take more risks, because you can't sit on the sideline. And it doesn't all have to be real estate. You're just talking about cash flow. I've got a friend who does really great in real estate. He does really great, but he's got a sweet tooth for cars and he likes really expensive cars. So what did we do? We showed him how to go buy those cars and put them on Turo and write them off.
Oh, that is impressive. That's amazing. Yeah. I love it.
The only thing that's too bad is it snowed here today, so there will be no Maseratis running around making Turo revenue. But no. And then what's he going to do with that? And he's bonus depreciation on those, and he's writing them off, and he's going to put more money back into real estate. You can create a machine.
Yes. I love that. Paul. So thank you for that. Yeah. Look here, that was the icing on the cake right there. Look, you just literally blew my mind with that one for real, because I didn't think about that. I thought about it, but didn't think about it that way in the application. So thank you so much for that. So Paul, look, and our listeners, we have quickly come to the end of today's show. Paul, I want to thank you for taking time out of your busy schedule to be here on the show with us. So from the bottom of my heart, man, thank you for doing that, for quote unquote sprinkling that knowledge and dropping those jewels for our listeners.
Thank you for the opportunity. It's great. And I'm going to blow your mind a little bit more. We'll talk offline about what he's doing with his expensive watch collection too.
Woo! Okay, look here. We may have to bring that one back here later. Look, I can't wait. So for our listeners, guys, look, y'all know, hey, how we do this thing here. For those of you who are new to following us and working with us and listening to us, guys, look, this is an endeavor for our community from my heart. This is an act and a labor of love to bring you all information that can help you transform your life. We don't need to be worried about what's going on, quote unquote, in other people's worlds when we can impact change and improve our own. You all know how I feel. I say it to you every week. I am not going to take that back. I'm not going to change it, because fundamentally, from the bottom of my heart, I love you. I love you. I love you guys. And we're going to see you